Hello, welcome to today's Insider. Now, we've got something a little bit different today. I'd like to introduce an Alliance member called Daniel Craig. How are you doing, mate?
Good, thanks, Woody. It's an honour to be here.
Oh, well, no, it's very great for you to come on. So I thought it's something a little bit different. And we've got subscribers and readers of the Insider will know that we've got a crypto event on tomorrow with Ryan Dinse. It's talking around the evolution of his whole crypto franchise. And obviously he's got a growing following on Twitter, and you're one of his followers on Twitter. And you struck up a bit of a conversation with him in the messages, and you said, look, I'd love to have a chat to talk about from a subscriber's perspective. And we kind of jumped at the chance because, you know, we've been talking a lot about the markets, and Greg's been discussing it. Ryan's been discussing it. We've got the event launching tomorrow on Thursday. And so we thought, what better to get a subscriber's point of view? So what do you think about that? I mean, you got in touch with Ryan. You've been following Ryan for a while, right?
Yeah. I've been an Alliance member, a lifetime Alliance member since March 2021.
Yep.
Which for those that are watching, an Alliance membership is someone who has access to all the subscriptions under Fat Tail Media. So I spend most of my spare time, reading and staying up to date with, the markets. But I sent a message to Ryan, and I just said to him, honestly, Ryan, the video format summaries from you are pure gold. I said, I can't express how highly enough how valuable they are. I said, if you're ever having doubts in your content, don't. As an avid subscriber, keep up the good work. I said, I'd be more than happy to jump on a recording from a subscriber point of view to discuss the status quo and where it's all going and what I've learned from you, etc.
Yeah.
I said, it's up to you, but you're welcome to use me at your disposal to trial me out, to give to other subscribers, more confidence as to what other subscribers are taking. I said, I don't want anything in return. I just said, I'm happy to help the cause, And
I will say it was totally unsolicited. So I've got to just make that statement. We didn't solicit you. You came to us, but yeah, you're over in Tasmania, aren't you? And you're a dentist by trade, and that's your business.
Yeah, correct.
Yeah, right. So do you want to just explain like your story up to now and what you kind of do and what kind of brought you to this point? Let's give everyone a bit of a background.
Yeah. So I'm a dentist, and I started my dental practice when I was 26. I'm 32 now. I'm single, I don't have kids, and I live a super minimalistic lifestyle with a high income and low overheads. So I live in a cheap rental in Tasmania. I've got a mattress on the floor and I don't have a TV. I do some other business projects at the moment, which aren't really that profitable, but I'm optimistic. I love building and creating businesses, and I love making money. I've also built many other businesses in the past which haven't done so well. But I've developed a real passion for finance, and I spend realistically most of my spare time reading about finance and the global markets when I'm not working in my practice or when I'm not, working on my other businesses.
Yep.
As I said, I became a lifetime member in March 2021, and I read most of the content that's produced.
I was going to say we have regular meetings within the business with the support team that help make our ideas, become available to subscribers and the editorial team. And we publish a lot of stuff. And I'm often interested because I speak to a lot of our readers, and some prefer to just dip in and out, but you literally read everything. I mean, that's an awful lot of reading every day.
Yeah, I'd say I wouldn't say I read everything like in detail. Sometimes I'll skim over things when I'm busy, but I read a lion's share of it. And I also have, I've got an appreciation of the different asset classes, but then I've got my ones that I'm like, I really have to sit down the time to read this. And we can talk about more about that soon, which ones I value more highly.
Yeah, and just a quick question on because a lot of the thing we get, especially from new subscribers, is that why is there no house view? And so you'll get lots of editors with lots of differing point of views, and sometimes one can contradict the other. So we've got Ryan Dinse, for example, very pro crypto, and he's our thought lead in the crypto space. And then on the other hand, we've got Vern Gowdy, who is completely the other side of it. So just before we get cracking, how do you do you find that valuable or?
Yeah, it's definitely healthy to read both sides of the argument. What I do rate about Vern is his, his time in the industry, and his appreciation for cycles. But, like any industry, it's so easy to generalize and tar it all with the same paintbrush. With crypto, it's such a broad umbrella term. And, you have your niches and your specialists within those markets. And even though Vern does, you understand his point typically, he talks about the tulip bubble and all that kind of stuff. I think there's certainly some once in a lifetime opportunities in the crypto space. And it's, as Ryan says, it's been, crypto's been around for, I don't know, 12 years or something. It hasn't gone away yet. It hasn't completely gone to zero. Why is that? Why is that? Is it a bubble, or is there something a bit more sticky?
Interesting. Well, we'll get into the crypto stuff in just a moment. And but let's sort of start from the beginning a bit more. So you started your business when you were 26. Have you always had an interest in investing in finance, or is it something you kind of just picked up after you came into a bit of disposable income, say, to invest?
Yeah. Well, I didn't start investing until I started making a profit in my dental practice, which was when I really started making money. So I was 27 when I started investing. So at 27, I bought my first investment property in inner city Melbourne, with a view to developing it. And I bought some stocks as well and a little bit of crypto in 2018, just after the 2017 bull run. But I didn't know much about crypto at that point. And I also, on the side, was spending a little bit of money trying to start entrepreneurial businesses, which didn't do so well, but it was money I could afford to lose. And I learned a lot. And as I said, I love building and creating businesses. But my original investment goal was to grow my wealth mainly through property development, which I think is a solid plan, especially in Australia. And pre-COVID March 2020 crash, I got my second investment property, once again, inner city Melbourne. And I remember after the crash thinking, oh, this is such a bad idea. I bought it. Everything's going to tank, but it didn't. It did the opposite.
Yeah, right. And it was that, I think that was the time, you mentioned in one of our sort of contacts and correspondence that was the time you really started looking into the monetary system and how money and cash was created, which explained a lot of things, including the rebound.
Yeah, definitely. It was really after that March 2020 crash. And I think there's a lot of other big, heavy, crypto investors like Saylor and all that. Where's all this money coming from? I didn't know enough. I didn't know much about the mechanics of the monetary system. And that really sparked my interest. And I feel that ever since the 2020 crash, and given my, length of time in the industry hasn't been long, but I just feel it's hit this exponential, like a hockey stick peak up. And I just feel that the crypto market now compared to pre-2020 is a completely different animal.
Yeah, right. So why do you invest then as well? What's the answer to that question?
Yeah, well, I'm a really OCD kind of personality type, and I hate being wasteful with my time and my money, and I hate missing opportunities. So I want to maximize my wealth so that one day I have time and money to do what I want when I want. I have an above average disposable income, so I enjoy putting it to work for the future. I don't get much joy out of material possessions. As I said, investing is fun. For me, money is just a scorecard.
And you don't even have a TV, do you?
No, I don't have a TV in my room or anything like that. This is my room now. It's just like super basic.
Right.
Just the way I like it.
Yeah. Fine. So so how did you get into the fascinating world of cryptocurrencies then? Like how did you get your leg in? Because I know that you said you had a bit of a dabble in 2018, and you did say to me that you were really just going on price action. But how has that evolved, and what's changed, and what tell us the story of that.
Yeah. Well, one of my best friends, who I've actually never met anyone smarter than this guy, we call him Einstein. He's also an Alliance member. In 2018, he was raving about Bitcoin. And I thought, if he's talking about it, then I'd just be stupid not to listen. He's been a subscriber to the Ryan Dinse since 2017, when Ryan ran the Secret Crypto Network. So I invested in Bitcoin in 2018 and some Ethereum and some other altcoins. I even got a ledger as well and had a little ledger wallet. And at that time, I wrote my keys on a cloud drive, which I now know what not to do. Since then, I bought a new ledger and, transferred all my crypto over. But because even when you delete your keys off the cloud, it still leaves a trace. But yeah, in 2018, I didn't know much about crypto, but I trusted Einstein's judgment. And my original plan, when I bought my Bitcoin and Ethereum, then I said, when it hits 35K, I'm going to sell. And it hit 35K in December 2020, and I sold it all. I stuck to my plan. And Einstein's like, and I'm like, nah, I'm going into property investment. And Einstein's like, you're crazy. Like, what are you doing? And then I revisited my plan, and then I was like, all right, well, I stuck to my plan. I'm proud of myself for that. But yeah, I think, I've got a new plan now. And my plan is to, build my wealth through predominantly Bitcoin.
But did that sale, did that help you in the property side of things though, as well?
I didn't like use my Bitcoin at all to buy deposits, but I know a lot of people have. So yeah, I ended up buying back into Bitcoin not long after. It had gone up like another 10K or something, but I bought back in, and my new plan is to buy, and I'm never going to sell.
Yeah, right. So, I mean, the crypto markets are notorious for the huge volatility.
Yeah.
Can you just give us, like, how do you personally get through that yourself? Because I know that you've been through a few down cycles and up cycles.
Yeah. Well, the price you pay for outsized returns is volatility. Simply, if it was easy, everyone would do it, but the good thing is education leads to confidence, and confidence gives you the conviction to hold strong when others won't. So yeah, I mean, you've got to kind of get off on being a contrarian, and education does that for you.
Yeah, did having it all on the ledger just mean you couldn't just easily just sell as well?
What's that?
Did having it all locked on a cold storage wallet, a ledger, did that help you just like not capitulate at all through the?
Oh no, I don't think so. Like I still wouldn't have sold, but because it's not that hard to transfer it from your ledger onto the exchange, but it is an extra little theoretical mental barrier. I guess it does make it a little bit hard for yourself, like putting cookies in the cookie jar and putting a little putting a padlock on it,
Yeah, and then throwing away the key. So what was the thing that you found most challenging about it?
Yeah. So look, the first few cycles, I think, when my thinking was so highly influenced by price action, because I've been through five downtrends. One when it went from 10K to 5K, one went from 20K to 10K in Aussie dollars. The other one when it went from 15.5K to 7.5K, then 80K to 40K, and then 90K to 30K. So, initially when I didn't know much about crypto, in that first few years, I was influenced by price action and maybe a little bit, tempted to capitulate. But, in those years, in those earlier years before 2020, money printing wasn't so crazy back then. And I could afford to lose it, and I didn't need the cash to service my other debts because I still had an income. But I've also been rug pulled as well. I was in Luna, and I didn't have a large amount, but I've been rug pulled by some other scam coins. And
so I'll just cut in there, just in case anyone doesn't know the Luna story. That was a centralized crypto that basically went bust, correct? And similar to Celsius recently.
Yeah, exactly. And Ryan never recommended Luna. And if it wasn't for Ryan, I probably would have had a dip at Celsius as well, because a lot of my friends were speaking about the yield on Bitcoin, and Celsius sounded quite attractive. So there's a fair chance I could have had a dip at it. So it's not always what Ryan recommends, but it's also what he doesn't recommend as well, which is important.
Yeah, absolutely. So what did you find? So once you sort of went into that market, I mean, all investing is a learning curve, right? And actually, Greg Canavan says you need to lose money over time, whether that's in whatever market you choose to spend your time thinking about, because that's really the price of an education in it, really. But what did you find easy to grasp about it? Because I know you mentioned you got a bit of OCD when it comes to this stuff. Like when you go into something, you go in head first and you read and you read. Did anything come easy to you, or was anything surprisingly easy? Or
it's a great question. And once I realized, since the 2020 COVID crash, the M2 money supply was infinite and exponential, I realized, and also that the US dollar had reached a critical point, where the debt to GDP, I think it's, don't quote me, I think it's 120% when it hits that level. So for every dollar the government spends, you get less than $1 in productivity, and that the government has to pay down old debt with new debt. I thought it's only mathematics that, the money supply is going to continue to skyrocket. And in my opinion, I think we're going to experience hyperinflation. And the money will continue to debase. And that's happened over the course of human history. Mm-hmm. If you look at the different empires and the dynasties, there's been, it goes in cycles. And yes, I think there will still be some deflationary busts like we're in now. But I think, just like March 2020, it'll be quickly met with monetary easing in the form of relief bills, and even more so with the cashless central bank digital currency era and a universal basic income. There'll be all these new reasons, to print money by the politicians. And from that point, I knew that long-term cash is trash, and I need to be in an asset class that outperforms the money supply, and the inflation rate, or at least matches it. We're in an age now, in my opinion, just a subscriber, but where even 10% returns, they don't cut it anymore, because that's not the real inflation rate. I think they need to be 20% plus just to maintain purchasing power. And Bitcoin has achieved this. It's got annualized returns of 150% since its inception, and it's an independent sovereign currency that can't be debased. And it's the first time in the human history. It's the first time in human history conception. That's another reason why I love Bitcoin, is that all the other assets are denominated in US dollars, property, stocks, this is independent. It's a self-sovereign currency. It's a revolution. And this, as I said, there's never been anything like this, and it's a big deal. And I liken it to the invention of fire or electricity or the light bulb, something that's safe from government manipulation, and it makes sense. Everything else has been digitized. Why wouldn't a newer, improved version of money be created? And it's not that I necessarily want to be in Bitcoin. It's that I don't want to be in the current system. And I wouldn't be in Bitcoin right now if the current monetary mechanics weren't so flawed and manipulated and corruptible and centralized by US politicians who, like me, are corruptible and driven by self-interest.
That's very, very mature perspective there. So what about, you also have a little bit of gold, don't you? So you spread your bets a little bit there too.
Yep. Yeah, I've got some, well, my current portfolio is 35% crypto, 10% gold bullion and gold stocks, and 50% property. Yeah. So I mean, I had a lot of stocks, which I ended up selling a lot of it down just to buy Bitcoin. And I'm actually in the process of refinancing one of my properties and using its increased equity to pull cash out and buy more Bitcoin. Right. And the banks like ANZ said it was okay if I was transparent with them. I said, I want to buy more Bitcoin. And they said, I'm able to do that by pulling out the cash. But I still think property's, good. And what's good about property is that, you can leverage the bank's money to make money on property, which you can't really do with Bitcoin at the moment. But my personal sentiments is that property as a global asset, I don't think it's as safe, completely safe long-term anymore, like it used to be regarded as. We had our first property market crash in 2008, and it's no longer safe as houses like the banks used to call it. But I think Australian property is good because Australia is a desirable country. But I think globally, the declining birth rate and the die-off of the boomers, I don't think we've got the population to sustain the increased property development market.
Yep.
I do, as I said, I do believe that Bitcoin will continue to outperform the other asset classes, and I believe this asset class is unique. And there's a significant asymmetry of opportunity compared to other US denominated assets.
Well, we talk about that a lot, asymmetric bets, right? We talk about that a lot. Greg talked about that too. Greg he's a natural ultimate contrarian, really. He tends to go in when everyone else is shirking away. And that's kind of what cryptocurrencies are at right now, according to Ryan. I mean, it's not many people are going to get in at this point, but it's probably the ideal time too, if you're that way inclined.
Yeah. And and Greg talks about that in his book, Your Brain and the Stock Market. We have these primal instincts. We have that herd mentality bias. When we panic, we run, that kind of instinct. So, but I think if you have that self-awareness and you're tough, and well read and educated, and confident, and you've got some really trusted, high quality advisors, and financial coaches, there's no reason why the average subscriber can't, do the same thing and subsequently, reap the benefits from that.
Yeah. Well, look, final question, Dan. What do you, I mean, we try, as you know, we only advertise our own products. We only advertise our own services. I get a lot of emails to say from readers, like, why do you advertise so much? It's like, well, we only advertise our own ideas, and we only advertise ideas that we deem worthy of promoting, right? And we always try and make them valuable anyway. But just from a subscriber's perspective, I'd love from a fellow Alliance member, just from your point of view, what is it that you think is valuable in being one?
Making money and self-interest is what drives me. And as I said before, education leads to confidence, and confidence gives you the conviction to hold strong. Education will give you that courage, and learning from a trusted advisor with a track record, who has an appreciation of the macro backdrop, who is a fiduciary service, I think will give you those asymmetric returns. And as I said, I think crypto is the best place to invest your money at the moment. To the subscribers, you need to see the chaotic price actions as your time to shine, your time to step up to the plate and have courage. And I know that during brutal bear markets are where champions are made. As I said, I get my jollies off doing the opposite to everyone else, but you need to do the best what's right for you in your current situation, as not everyone is a 32-year-old, single dentist.
Yeah, you're in a very unique position.
Yeah.
I'd love to have that much disposable cash, but I've got 2 kids.
Yeah, well, you have to do what's right for your position. Yeah. But, Ryan's evidence is proving that it's more risky not to be in Bitcoin than it is to be in Bitcoin. It's still early, but the time's running out in an exponentially growing asset that's growing faster than the internet, and we haven't even hit mass adoption yet. But when we do, it's going to get ugly for the latecomers who have seen their wealth be inflated away and having to buy in at higher prices. The early comers will be rewarded. And the good news is that it might not feel like it, but we're still early. And as I mentioned earlier, I've been scammed, and there's risks in the space as it's quite unregulated. So it's so important that you do it safely with a trusted coach. And that's how I see Ryan. You know, I see Ryan as a coach. And, one last thing is I don't consider myself smart, but more lucky that Einstein introduced me to Fat Tail and Ryan Dinse. I've honestly never felt any safer or more confident in my investment decisions than, and my current portfolio allocations. And I sleep really well knowing that my money's safe in Bitcoin. And I love all the editors at Fat Tail. And I read everyone's articles where I can. But I think the most alpha at the moment out of all the asset classes is in crypto, which is why I take Ryan Dinse's posts very seriously. And I think you are crazy if you don't. It's, also good to follow Ryan on Twitter, but you can't compare his tweets to his newsletters. There's just no comparison. And it's always comforting to know that you've got a full-time professional with a track record that's going through all the fine details closely, because it's the details that count. So.
Well, mate, I can't. That is a ringing endorsement, and like I say, I just want to just state from the start that was not solicited. So thank you very much, and it's really awesome to hear what an effect that of our research has on subscribers. So thank you. I just will make one point, just from a compliance perspective. I know you referred to Bitcoin as safe. We would argue it's still a very highly volatile asset, and it's probably not regarded as safe, but that's your opinion, and just wanted to clear that up. But as part of a diversified portfolio, I think, Ryan makes the point. Whatever is right for you in terms of allocation is the right way, whether that's 1% or whether it's 35% in your case. But it's great to hear from an Alliance member. And I'll put it out to anyone that wants to get in touch. It'd be great to have these conversations.
Yeah, big thanks to Ryan and Einstein and you, Woody, and everyone else at Fat Tail for all your hard work you do and your content. I'm in love with staying up to date with everything. I just want to say a massive thank you.
Oh well, thank you. The way we're able to do it is for because of subscribers such as yourself. So thank you. And for those listening, if you haven't signed up for tomorrow's event, feel free to sign up, and we'll see you there. And thank you, Daniel. And I know you've got some clients to get back to this afternoon, so I won't keep you any longer. Cheers.